and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets attempt a recovery from the day's low. The Nifty trades above the 10,550 mark. Real estate and metal stocks lend support. Broader markets outperform in trade. Punjab National Bank falls the most in 4 months after it reports fraudulent transactions worth 11,400 crore in a Mumbai branch. Bloomberg reports that Ultratech Cement and a consortium led by Dalmia Bharat are the front runners for Binani Cement. 4 other bidders are in the fray. And Sun Pharma is one of the top losers on the Nifty ahead of its third quarter earnings.
Okay. That's essentially the top headlines. Thanks for joining us on Countdown. My name is Neeraj Shah. And the markets are trading very, very flat. It's been a flat day for most part of the trading day today, really. Though the volumes slightly better than what we've seen in the recent past. The last couple of days, volumes were very, very thin. In today's session, at least the volumes have picked up a little bit in the session. The broader markets, about 0.5% or actually about 1% for the BSE small cap index. So mid caps and small caps, there's no pressure or less pressure, let me put it that way. Bring up the Nifty heat map and you will see banks clearly facing the brunt of selling. So Axis, SBI, Yes Bank, ICICI Bank right here. So it's the banking stocks that are facing the brunt of selling pressure in today's session. Bharti Infratel is down about 3.5%, and IT has been having a mixed day because TCS is in the red, but last I saw HCL Tech and Tech Mahindra were trading in the green. In fact, Tech Mahindra is right up there, 2.5%. But I would say that one pocket that is gaining today at the broader end of the spectrum and the Nifty 50 are also the NBFCs. The common belief is that the space that will be vacated by the PSU banks because the competitiveness goes off will go back to the NBFCs. So the likes of Indiabulls Housing Finance or Bajaj Finance on the Nifty or some of the stocks in the mid caps and the small caps are doing okay. Just want to mark 4 or 5 mid caps and small caps in the session today. These are the stocks that are doing well. Then start off with NCC, the results impact coming in for Nagarjuna Construction. So 8.5% up for that one. Good going for NCC. NBFCs, I was telling you that they are surging. By and large, there is a good move there for NBFCs. So look at DHFL, look at Canfin Homes. There's a really strong move there. PNB, on the other hand, because of the fraud detected, has corrected. So down about 6.5 or 7%, 7.5% now for PNB. So that's not doing all that well. Last but not the least, results impact seen on both of these stocks. Bank of India, you could also argue that it's a part of the PSU banking space that has come down, but that and Wellspin are a couple of names which aren't doing too well for themselves in the session today. What about the liquid universe though, Navneet?
Well, Neeraj, today the day once again belongs to the broader markets as we've seen, but if you look at the benchmarks, Nifty opened around the level of 10,585, touched the high of 10,590, but it took Nifty only half an hour to give up its opening gains today, and since then it's been hovering around that level of 10,550, but it did cross the 50-day moving average of 10,568. So on closing basis, that mark will be important. Let's see if we can close above the 50-day moving average in trade. The good news is that the volatility continues to cool off. So where 7.5% downtick was seen on Monday, it's another 7% off for the India Volatility Index. Remember, last week we closed somewhere about 19.2. Those levels have now come to 16.6. The Bank Nifty is underperforming today, and the reason is the Nifty PSU Bank, that's there on your screen, cuts of almost 3%, and that has come on back of new framework which has been issued by Reserve Bank of India to deal with the bad loans. There is a carnage if you look at the entire PSU banking space. In terms of option strike, there's a lot of call writing that has been seen from strikes 10,800 and the 10,700. So clearly the traders are writing out of the money strikes. Probably they're not expecting Nifty to touch those levels in the near term. 10,800 strike was pretty active today, and the 10,500 put strike has been sitting with maximum open interest, and that continues to see riding once again. It's added about 8 lakh shares as we speak. Well, in terms of stock futures, as Neeraj highlighted, the NBFCs and that the housing finance companies are pretty active. So look at Dewan Housing, it's gone up on very high volumes on the cash side. So definitely watch out for the delivery data, and even for the February futures, we've seen some long build up coming about 6% higher as we speak for Dewan Housing February futures. The other one which has fallen on very, very high volumes is Punjab National Bank. On the cash side, the volumes are pretty high today, and even if you look at the February futures of Punjab National Bank, last when I checked, the open interest was up nearly about 31% now. So that's telling you traders are shorting even at these levels Punjab National Bank, Neeraj.
That's interesting. Okay, so the set of stocks which in the liquid universe are active must mark PNB though. I don't think there is any conversation on any show today which will be complete without talking about Punjab National Bank and the fraud detected thereof. 8% down. The fear I think that the markets would have is what about the other advances that other banks would have lent on the basis of these transactions that have happened at PNB. And this is what we know so far, of course, that the fraudulent and unauthorized transactions have been detected and evidence of connivance of bank officials. And if this could become a larger issue as well, because based on the transactions, other banks have advanced the money to overseas client. Now, this should, yes, keep PNB under check here, but more importantly, it should probably be an overhang on some of the other PSU banks as well. Not saying all, some of the related ones. Let's see, the case has already been referred to the law enforcement agencies, and I'm sure they're doing the bit, but this will keep the PSU bank by and large under check. That the RBI has come out with new guidelines which will essentially also hamper the corporate facing banks in the near term. Could also be a reason why all of those corporate facing banks and PSU banks in particular are all under pressure in the session today, because if you look at Axis, ICICI or Yes, all of them are under pressure today.
As we speak about Punjab National Bank, there are some important flashes there on your screen. The banking SECI has told Bloomberg Quint that the PNB fraud case relates to Nirav Modi and Gitanjali Gems case. So probably that could be the reason why that number also looks pretty much on the higher side. So at least we know by now those fraudulent transactions were taken by which entity. So Nirav Modi and Gitanjali Gems, just want to remind our viewers, both of this was reported last week that there was some fraudulent money siphoned off by both these companies. Nirav Modi is once again a jewelry company and Gitanjali Gems is again a jewelry company. So the fraudulent case that has been reported to exchanges today worth 11,400 crore, Neeraj, relates to both the jewelry companies.
Yeah, that is so. Well, coming from PNB as well, and I'm guessing Gitanjali Gems could be under pressure too. I mean, it's a stock that has now largely been forgotten. People don't usually come out and talk about it in big measure, but 6.5% down, 4 million shares traded on Gitanjali Gems in the session today. Not the best of days.
The case is actually with CBI now. That's what the banking SECI is saying, and 10 bank officials have been suspended. The banking SECI has also highlighted that the fraud letter of understanding was issued by branch manager in Mumbai.
Well, it'll be interesting to see what course and what direction does this take. In moments from now, we'll of course get in a fundamental voice to talk about all of this and more. In fact, I'm told we do have Rahul Arora with us now, so let's okay, we'll just get him in moments from now. What we should do while we're just waiting for Rahul Arora is get Nikki Mirchandani from our research desk. She's got this piece of research done on how fund managers across the world, Bank of America Merrill Lynch has done a fund manager survey, and they are giving out their research piece on how fund managers are predicting what the next few months could look like. And I think the telltale statement was that fund managers, while a lot more amenable to buying, I think this is not verbatim really, but they're not throwing caution to the winds. They are maintaining a cautious stance, and I think that was the sum and substance of this whole survey that Bank of America Merrill Lynch put out. In just moments from now, Nikki will come in and talk about that as well. But it should be interesting. It doesn't come as a surprise. Most people have been talking about buying, yes, but buying very, very selectively.
Well, that's what even the market internals in the last few sessions have been indicating. There is one side which is just providing support, and that's the domestic institutions once again. But Neeraj, if you look at the gross amount of transactions which are being undertaken, that's definitely gone lower if you compare it to the month of January. So overall, buying definitely is taking place from the domestic institutions, but that value is going down now.
Yeah. Let's see. Today might be a small departure from what we've seen the last couple of days, wherein the volumes were very, very thin. Today too, they're not really gung-ho, but I think the last I checked, the volumes were par for the course. You'd probably hit about the 35,000 crore mark on the NSE cash in the session today. Let's bring up the turnover picture and show you what the turnover is as of now. At 1 o'clock, it was about 20,000 crores. You now have about 24,000 crores. So you'll probably touch about 35,000 odd crores, northwards of 30,000 crores for sure by the end of trading day today. And the FNO turnover too could inch up a bit. So I think volumes in today's session would probably nudge what we've usually been seeing in the session. So that's something you got to watch out for as well.
But there are some pockets, Neeraj, which are doing pretty well, and especially when the broader markets are outperforming. I want to pull up the rise stocks. KRBL is doing well in today's session. And remember, Monish Pabrai's fund had checked into this counter on Monday's trade, and that's the reason 6.5% gains is what you're seeing there. The other rise stocks, even Kohinoor Foods, that's pretty active in today's session, 12.5% higher. Just want to remind our viewers, the earnings of this company will be coming out in today's session. And LT Foods, so that's a rub-off effect that you're seeing on the entire space. That too is seeing gains of nearly 5.5%. The other stock, TTK Healthcare, this stock's been pretty active in the past few sessions. I remember one of the funds had checked in here as well. Today it's locked in upper circuit with gains of nearly 20%. And Canterville Retail, that has also surged about nearly 16.5% as we speak. And besides that, a lot of other counters from the likes of, you've got Nitco, that's up 12%, and Patel Engineering too has surged in the last few minutes of trade.
Well, we'll get Patel Engineering Management in moments from now, but let's get your market voice. Rahul Arora, CEO of Institutional Equities at Nirmal Bang, joins us right now on the show. Rahul, can you hear me?
I can, Neeraj.
Great, Rahul. Thanks so much for being patient with us. Apologies for that delay. We're not able to get the line through. Rahul, just wondering, and we'll get in Nikki to talk about that Bank of America Merrill Lynch survey and then get Rahul's view on that as well. But just wondering, Rahul, what's the institutional client response been the last 5 or 6 odd sessions? Are they selectively buying? Are they shying away from what they usually used to do? Or is it business as usual?
Well, Neeraj, honestly, I think, at the high point of this rally, a lot of people were getting very nervous at 11,200 on the Nifty, but they had the cushion of liquidity, which was overriding any kind of fundamentals. When we were talking to fund managers, they were finding it extremely difficult to justify valuations. But just because the inflows were consistently coming in, they had to be deployed and they couldn't be sitting on cash. So, to just put it into perspective, at 11,200 on the Nifty, the market was trading at 22 times FY19 and about 19 times FY20 earnings. The bond yield at about 7.6, 7.7% was telling you a totally different story. So I think a lot of people that I have spoken to since the correction happened were actually quite happy that it happened, and it happened that swiftly. They have started deploying money back into stocks that they like, but they still believe that the concern lingers on. The biggest of them being a lot of the fund managers, especially my overseas clients in HK Singapore, are looking at the US 10-year, US bond yield actually very closely, and what our 10-year does in conjunction with that. So a lot of people believe that if the US bond yield heads to 3%, there could be a renewed correction that we see, but nobody is actually talking of levels much below 10,000 right now. So I think it's been a welcome correction. It's given people a reality check that the market can correct, and it's happened very swiftly, but selectively we have seen people who have sort of come in and started buying across the board.
Okay. Rahul, fag end of the earnings season, what is it that has stood out most for you guys? I mean, has there been a sector that has really done well and surprised you, or is there a sector that's really underperformed compared to what you guys were estimating?
Well, Neeraj, I think anything consumer facing has done well, whether it's autos, consumer staples, consumer discretionary. We've seen the numbers from Maruti. M&M was all right. The tractor companies have done well. Commercial vehicles like Ashok Leyland have done well. Even ancillaries like, in the auto component sector have done pretty well. You've seen reasonable expansion in consumer staples, whether you look at Dower, Hindustan Unilever, across the board, there's been good margin expansion and decent bottom line growth. Discretion.
No, Rahul, just let's try and just repatch that line if we can, because I'm not getting Rahul Arora's audio very, very clearly. But I do want his opinion there, and we do want his opinion on this very small piece of output that Nikki's getting us for right now. I think while we're talking about the fall in Indian markets, the global equity markets may have rattled investors around the world, but Bank of America Merrill Lynch Fund Manager survey shows that investors are holding on to more cash and allocating less to equities. Nikki, what is the survey saying?
Well, you summed it up rightly. To begin with, it's the survey which was done from Feb 2 to 8, and respondents and 196 panelists around took this survey and said that S&P 500 is expected to peak around an average of around 3,100 levels. It has seen the allocation to equity has fallen to net 43% from 55% that we've seen. That's almost largest 1 month fall that we've seen in nearly 2 years now. It also says that the allocation to bonds now are at record low of net 69%. It also says that the cash balance has risen to a level of 4.7% this month as compared to nearly 4.4% that we've seen in the previous month. So they are holding on to cash right now. Also, it says that only 5% of your fund managers right now suggest that the interest rate could inch lower from here on. 80% are of the view that the interest rate will be higher going forward. And lastly, they want to make a point, a record net 24% of investors survey suggested that the global corporate balance sheet at this point of time seemed to be over leveraged. The point that they're making in this survey is pretty clear, that the investors are anxious at this point of time, but that does not give all clear to go ahead and buy on dips. They are holding on to cash, but they're not allocating that money in particularly in terms of equities.
All right, Nikki, thanks a lot for bringing in all those details. And I guess we have Rahul back with us. Hi, Rahul. This is Navneet. Just want to take your view on a small piece which Nikki just presented for us, where the fund managers of BofA ML are of the view that the clients are holding on to more cash, considering the kind of volatility that has been witnessed in the global markets in the recent past. What are your checks suggesting, Rahul? Are the clients actually sitting on more amount of cash? Are they jittery after the kind of fall that one has seen in the US market?
Well, it's a very interesting question, Amit, because we asked this to a lot of our fund manager sort of investor community after the correction, and I don't think anyone is sitting on more than 7 to 8% cash, which is all right in the context of the fall that we've seen. And like I was telling Neeraj in one of my earlier answers, is that earnings season hasn't been too bad. I mean, it's not been too hot, not too cold. Obviously, you had a base effect to go with. But the good part, I think, was, apart from the consumer-facing companies that did well, I think they were the first green shoots of capital goods companies trying to do well. And we started seeing selective buying over there as well. So I don't think people are going in aggressively and buying the market left, right, and center, but I don't think the mandate is to be sitting on too much cash. So I think the highest cash levels that I can think of when a fund manager spoke to me was about 8%. So I'd like to believe that most of the Indian fund managers are either totally or very highly invested at this point in time and have used the correction to come into the market.
Okay. Rahul, it's a slightly patchy line, so I won't really take too much of your time and waste it. But just one final question, really, if we can. You yourself track the consumer space very closely. We've got Amit Jatia coming in tomorrow, and the trend that we saw in the same-store sales growth across that board, be it Westlife or even Yum Foods or Jubilant, was pretty strong. What did you make of that? And is this something that is sustainable, or it's difficult to give a call on that right now?
It's not going to be sustainable as I was for sure. Because this quarter for listed and unlisted players, as you very correctly pointed out, no one was anticipating those kind of numbers and the kind of upgrades you have seen subsequently. I think the big thing that has worked for Westlife as well as for Jubilant has been product innovation. Of course, Westlife had a lot of other things that went for it, like brand extension in the form of McCafe. A very significant lever for Jubilant Foodworks, as you know, is delivery. McDonald's was hardly existent in delivery till about 3 or 4 years back. I think that's become a very substantial part of the McDonald's business, which also helps them quite dramatically as far as same-store sales growth is concerned. But you have to also keep in mind, Neeraj, that this same-store sales growth has come in on a very depressed base. It was on demonetization. So to grow on 15 to 20% same-store growth going forward may actually be a bit tough. Obviously, we have had to upgrade our numbers to that effect. So I think these guys will probably consistently do high single digits to low double digits. It has been reflected in the valuations and the stock price, but for investors to be buying this stock for consistent 15-20% same-store growth would be a very tough call. That being said, Neeraj, I think if you just take Jubilant Foodworks as a case in point, The stock had gone down to 750 and recently went to as high as 2300, currently hovering about 2000. I still don't think it's a very bad entry point because our own target price on Jubilant is about 2500 or thereabouts. But I would advise investors not to come in with the same aggression at 2000 as they probably would have, say, 1000 rupees lower than this, because it's human tendency to start extrapolating the last set of results. And like I said, because of a depressed base, you've got these numbers. There are things going right, but don't blindly extrapolate these numbers because they may not come through it on the high double digits as you've seen in the last one quarter. So just be a little careful. These are still buys for us, no question about that, but not as aggressive buys today as they probably would have been, say, even a quarter back.
Okay, Rahul, we'll leave it at that note. Appreciate you joining us today and taking us through your views on different sectors as well as on the markets. Well, it's earnings season and we have Dhanuka Agritech, which has reported a steady set of numbers for its December quarter with almost 6% jump in its top line numbers, while the margin shrunk to 16%. What have been the key highlights of the quarter gone by? To shed more light on this, joining us now on the phone line is the Managing Director of the company, Mr. M.K. Dhanuka. Hi, Mr. Dhanuka. Good afternoon to you and thanks a lot for joining us today on Bloomberg Quint.
Good afternoon, ma'am.
Could you tell us, is it a seasonally weak quarter for the company, December 3rd? Because sequentially, it doesn't make sense to compare the numbers, but also if you could shed more light in terms of what has led to the contraction in the EBITDA margins on year-on-year basis.
Actually, last year we had terminal excise benefit, which is not there in this current year. That has basically impacted the EBITDA margins.
Okay, so
and the lower sales growth projected, the expenses were higher in comparison to the sales growth. That is another reason of lower margins. But we are confident that the fourth quarter should remain good. The third quarter could not perform well because of the low crop prices, less pest infestation, and the erratic rainfall in the month of October in South.
Okay, Mr. Dhanuka, 4.5% uptick when it comes to the revenues for the December quarter. Could you tell us what was the volume growth in that?
Volume growth is around 7%.
Okay, and in terms of margins, considering you already highlighted the reasons why there was a contraction, going ahead, what will be the margin trajectory that the company will be looking at? Will it remain between 16 to 18% or will we can cross the mark of 18%?
We have given the guidance for 10% revenue growth for the whole year and around 18 to 18.5% EBITDA margins. And we hope that by year end, because this quarter is also a reasonable quarter, fourth quarter, so we hope that we will be able to deliver this 10% growth in 10% growth in sales, and the EBITDA margin should be in the range of 18.5%.
And any new products that you're looking to launch in FY19 that you're working on currently?
Yeah, we hope that we will be able to launch 2 9(3) molecules first time in India. The registrations from Central Insecticide Board are at final stage. As soon as we get registration, we will be launching those 2 molecules in FY19. Otherwise, 9(4) we have launched this quarter also, Phenox 1000 from on P2P basis from Syngenta we have launched, and one Suelo from Oro Agri, which is a soil conditioner from USA. These 2 molecules were launched in last quarter.
Yeah, I mean, I think the 2 fungicides that you launched fairly recently, Mr. Dhanuka, could also be adding to sales. My only question is that I can understand that FY18 saw a lot of disruptions due to GST as well. And therefore, this 10% odd revenue growth, if I'm not wrong, is something that is acceptable. What about FY19? Do you believe the pace of growth can increase?
Yeah, definitely, but everything will depend on the monsoon, because in India we have only 40% irrigated area. 60% is still dependent on rain god. So if rainfall is good, then we hope that we will be able to achieve 15% growth in FY19.
Okay. You won't need to raise any kind of money for increasing marketing products or launching new products or otherwise, right, Mr. Dhanuka?
So we don't need any money because the company is having ample cash available in its balance sheet. We are a totally debt-free company, and we don't need any unless we basically have some joint venture or we decide for anything at our Dahej land. Only then we'll need some funds. Otherwise, company don't need for the existing business.
You mean setting up a new capacity?
Capacity we have already built up.
No, you're talking about the Dahej land. So what is it that you would look to do there, sir?
There we are looking for some joint venture or some technology. If we get, we can pay the royalty for manufacturing or contract manufacturing any kind of the activity over there.
Okay, Mr. Dhanuka, we wish you all the best for the quarter ahead. Thank you so much for taking the time out and joining us and giving us that perspective.
Thank you, sir. Thank you.
Well, that seemed okay. Revenue growth, not really gung-ho, about 10% margins maintained at that 18%, if I'm not wrong, is what he said. He'll probably
That's the guidance he's given. I think for the quarter it's 16%, but they'll have to do better than what they've done in the December quarter, especially in the March quarter, to achieve the 10% revenue growth and margin guidance of 18 to 18.5%. Though he's sounding pretty confident, Neeraj, that he'll be able to meet the guidance that's been set for FY18 at least.
Yeah, but it's just that FY17, the 21.5 first quarter also, I think, were not too bad a margin picture. So operationally too, Dhanuka Agritech's margins have come off quite a bit. Interesting to see. It's been chalk and cheese for this space, isn't it? UPL on one hand, and by virtue of a lot of other businesses, along with just this pure play business that is similar to Dhanuka or otherwise, has done really well. The others, PI Industries, true, has had its share of bad luck. Let's come out of it. But Dhanuka Agritech certainly seems to be in a, well, not a spot of bother, but certainly in a space wherein growth is not easy to come by. For FY19 too, the management was shying away from making any kind of assumptions on what growth could be from the 10% odd number that they might clock in FY18, which again won't be too impressive.
That's right, Neeraj, and the rain gods, they have to be good towards them for these companies, especially for FY19. But so far, no major cuts actually seen post the numbers of Dhanuka Agri. Management sounds confident of at least meeting the FY18 guidance. But I just want to pull up the Nifty PSU banking index. I think it's a day's low now. 3.5% fall is what, 3.6% now. So big cuts seen there for the Nifty PSU Bank, and I'm sure all the constituents there are trading in the red. Goes without saying, Punjab National Bank is now down nearly 9% in trade. And the start of the show we highlighted, it's in the F&O space. There are huge amount of open positions being created for this counter. Bank of India is the other one, which has fallen quite sharply. That's also down 7%. Oriental Bank, Canara Bank, all of them have seen cuts between 3 to 5%.
Okay, just wondering what's happening to some of the sugar names in the session today. Remember, I think Jayesh will join us any moment now. We'll talk about some of those as well. But I just want to bring up what a Dhampur or a Balrampur or a Bajaj Hindustan could be doing. Dhampur is up about 3.5%. Balrampur Chini Mills should also come up on your screen. There should also be Sri Dhanuka Sugars and a couple of others. Balrampur is actually flattish. They also have a corporate development which should actually be positive for Dhanuka, but not Balrampur, but that's not helping. Dhanuka Sugar is down about 2.5%. So that's interesting. Sugar names aren't really buzzing in the session today. What is buzzing? Let's see the list of stocks which are on a 52-week high to get a better sense there. Navneet already spoke about Canterville Retail. HCL Info is up 13% today at 68.5. Now, this is probably, yes, this is a 52-week high, 69 now and counting. So it's really zooming up in the session today. And the giveaway, Navneet, for this was the management or the company came out with a rights issue at 48 rupees, wherein 75% of the rights issue was subscribed to by the management, by the promoters. Yeah. So they pumped in 410 crores or thereabouts, if I'm not wrong, into HCL Info at a price of 48. Usually, when such a large fund infusion by the promoters happens, you know that there could be something, and the promoter is showing a sign of confidence in the business. You should take heart from that. That's a 6-month-old development. So in the last 6 months, Yeah, the last 12 months showed 21%, but the last 6 months, if you see what the stock has done, it's moved up from 48 to 68. That's about 40 or 50%. Yeah, 58% up move that has happened in the stock price of HCL Info. So good going really for this one. A couple of other stocks, and I think me and Navneet talk about this one a lot. Action Construction Equipment up another 10% today. And again, 2 consecutive quarters of extremely robust numbers by Action Construction Equipment. Not surprised. I remember the first time last quarter, October or November, when he spoke to us, the stock was priced at 110. I think from there to 190 in a matter of 3 months. The last 3 months of, or last, whatever, maybe the 6-month chart, but I would guess the 3-month chart of Action Construction Equipment, and it shows there. That's about a 69% uptick in the stock price of this one. In today's session too, up about 10% on 4 million shares traded. You just got to hear what the managements are saying.
That's right. It's been a good ride for Action Construction post its second quarter numbers, as Neeraj highlighted. So today also the stock's trading with gains of 10.5%. But since we're talking about earnings, Patel Engineering has seen double-digit gains today after it returned to the black during the current quarter. To discuss what led to a strong set of numbers, Kavita Shirvaikar, whole-time director and CFO at Patel Engineering, is joining us on the show now. Hi, Kavita. Good afternoon. Thanks a lot for joining us, and congratulations on good set of numbers.
Thank you, ma'am.
Kavita, could you tell us what has led to the strong quarter this time around?
Yes. See, total income from operation for Q3 FY18 stood at 636 crore as compared to 71 crore in Q3 of FY17. But though the turnover is decreased, there is increase in EBITDA because this year, current year, we have sold our project, Jogeshwari project, 5.45 acres to Lodha developers. So on account of that, we have booked some gain. And further, we have sold some land parcels at Bangalore to the Bangalore-based developer. So because of that, there is a gain.
Kavita, are these all a part of a strategy to exit what arguably could be non-core and get completely into EPC?
Yes. This is a part of sale of non-core asset, because right now our complete focus is on our core business, EPC business. See, we are L1 in about 4,000 crore worth contracts, and further we are bidding for more jobs.
What is the current order book though?
Current order book is about 7,000 crore.
Okay, so 7,000 crores of current order book, you are L1 in another 4,000 odd crores, and you're bidding for more projects.
Yes. Our target is to next 6 months to reach to 15,000 crore.
And how does that augur in terms of execution as well? Because your revenues, as they stand at the end of 9 months, and what do you expect the year end to be like?
See, right now for 9 months, revenue, the income from operations stood at 1570 crore. See, we target this year.
Sorry, I missed the number.
9 months, 1570 crore.
Okay.
So now for the year end, we expect it will be in the same line of last year.
Which would be about?
About 2,000, it will be between 2,200 crores, whatever.
Okay.
2,000 to 2,200 crore.
Okay, so you're already at about a book to bill ratio of 3 and you want to take it up higher?
Yes.
Interesting.
Kavita, you've turned profitable in the December quarter, but if I look at the 9-month numbers, the company is still making losses. I guess for 9 months, there's a loss of almost 24 crores. Can the March quarter be better for the company to return into black?
Hopefully, yes.
And what's the debt picture looking like? I'm looking at the finance cost. We've seen a huge reduction, 109 versus 163 crore, which was there in the September quarter. Have you repaid any debt during the quarter?
No, because see, our S4A implemented, S4A restructuring as per RBI guideline, it is implemented, where part of the debt, around 1,200 crore as per scheme, converted into OCD at 7% IRR. If you see, there is an overall reduction in interest cost because of that.
Okay, so it's on back of restructuring. And what's the current net debt on the books?
Current net debt on book around 2,500 crore total debt.
And what's the debt payment schedule looking like?
See, majority, if you see current debt 2,500, the breakup is 1,500 is sustainable and 1,000 crore, around 1,000 crore is converted into OCD, 10-year OCD. If you see 1500 crore sustainable debt, out of that majority around 1200 crore is CC liability only. Only term loan is about 300 crore.
Kavita, since you're with us, I just want to deviate a little bit from the earnings. And since you said you're out of the 2,500 crore, 1,500 crore or something is into S4A. The recent guidelines which has come from Reserve Bank of India, which has scrapped all these restructuring, and now they're looking at a new framework. How does it impact a company like yours where there is an S4A of about 1,500 crores?
Yeah, see, luckily in our case, S4A is already implemented. It was implemented in November 2017. So it's done. So now the company is, I think, standard. All our account with bank standard.
Okay.
Yeah.
Okay. Kavita, one last question from my end. Any past receivables which are still due and will accrue in calendar year 18?
No, see, as per now new guideline, like where we are eligible to claim arbitration amount against submission of bank guarantee. 75% amount against bank guarantee, that also we are in process. So we expect before March to get around 300 crores.
Okay, and that will be the end of it? I mean, that's the
No, as of now, till March, we expect 300.
About 300 odd crores. Okay, great. Kavita, I wish you all the best. Congratulations on a good quarter, and thanks so much for speaking to us.
Thank you.
That's Kavita Shirvaikar, the CFO of Patel Engineering. Well, the tone sounded reasonably bullish. Okay, let's get in our experts on the show, full tilt towards the day's trade. Adrian Mendonca, Senior Technical Analyst at IIFL, with us on the show, as is Rahul Randeria from IFCA Financial Services. Gentlemen, both of you, thanks so much for joining in. Adrian, how are you approaching trade? There is a stark dichotomy between the Nifty Bank and the Nifty. In fact, you could argue that the Nifty Bank is dragging the index lower. What do you do in terms of trades on the index?
Yeah, good afternoon, Neeraj. Yeah, definitely there is this dichotomy between Bank Nifty and Nifty. In fact, I want to be cautiously optimistic at the current juncture. The first scenario is that Nifty, if you check the small time frame charts, is actually trying to make an attempt to enter into this higher top, higher bottom cycle for the first time after they had huge fall. That's why we are seeing this consolidation happening in the Nifty. But this trading range for Nifty, that is 10,600 on the upside, whereas 10,400 on the downside, is holding pretty strong. So breakout on either side would actually decide the direction for the Nifty going forward. Whereas for a Nifty trader, my advice would be sell anyway close to 10,600, while one can consider once again buying back at around 10,400 for a Nifty. But the pain point here is the Bank Nifty, the PSU banks are showing a lot of weakness. In fact, if you see heavyweights, the private heavyweights like HDFC Bank, IndusInd Bank, they're trying to put up a fight, but unfortunately we are losing strength on the Bank Nifty, which is not a good sign. That's why I want to be cautiously optimistic rather than completely being optimistic currently. So Bank Nifty is a pain point below 25,000. I think this could actually open up completely for the overall markets, and weakness would spill over everywhere. So yeah.
Okay. Rahul, what about you? We've not been able to sustain the gains. I remember just 20-25 minutes back when we started the show, we saw Nifty trading around the levels of 10,565, but there's selling which is coming at every higher level.
Yeah, good afternoon, Navneet. If you look at the last 4 to 5 days of Nifty daily charts, that has been, Nifty has been struggling, and it has been stuck in the range of 10,637 on the upside and 10,400 on the downside. Now, after such a sharp carnage, which we have seen from the levels of 11,171, and when Nifty made a bottom of 10,276, definitely there has to be some sort of price cool off, and that is happening because if we look at the overall charts and if we look at the candle by candle, the volatility is getting narrower and narrower day by day. It will take some time. Current week, means I am talking about current week, which is a truncated week. Tomorrow being expiry in the Bank Nifty options. Next week we are going into expiry. So definitely there is no clear directional move seen on the Nifty, either on the downside or either on the upside. So definitely there could be one day up or one day down. It would be highly volatile trading sessions till expiry, I feel. So definitely one can trade in a band of 10,400 on the downside and 10,637 on the upside. Currently when Nifty is trading at 10,547, I feel that again some sort of pressure could be seen, maybe tomorrow or day after. So definitely at any pullback intraday basis, still we have 1 hour to go. Any 20-30 points pullback on Nifty also should be used to go short, because last 2 trading session Nifty has taken an attempt to break the range, but it has failed, and today it was a narrow range. So definitely it is failing again at the higher levels, and pressure has been seen. So definitely I feel any 25-30 points of pullback should be used to go short at the higher levels. Short to medium term target, maybe if we take about target for next 2 to 3 days, Nifty can test the level of 10,450 on the downside. And same as well in Bank Nifty. In fact, Bank Nifty has lost the ground. Nifty is still holding on the grounds. It is just marginal positive, but Bank Nifty is still not able to sustain at the higher levels. So on the downside, the crucial support comes around say 25,200, and on the upside major supply zone is 26,000. And currently now as we see that it is trading at 25,500, maybe another 1.5% downside could be seen in Bank Nifty. So maybe any 50, 60 points, 70 points pullback intraday basis on next 1 hour. One could go short at the higher levels for a target of 25,400 to 25,300 on the downside.
Okay, so that's pretty much a consensus view coming in for both Nifty and Bank Nifty from both our technical experts. So use any sort of pullback to create short positions is the view. But the broader markets are definitely outperforming in today's session. So let's check with our technical experts. What sort of trading strategies are they advocating for today's session? Adrian, I'll come to you first. What are your top trading strategies right now?
Yeah, see, I missed out on the Nifty Midcap 100 index. In fact, that index is actually showing a lot of strength. In fact, it is playing in a very good particular direction, that is up. So, the breakout is sustaining. We are seeing a lot of broad-based buying in a lot of mid-cap stocks, and that's why we've come up with, these 2 stocks that we are pretty bullish on. First is Arcom. Yes, I know that the stock is already up 10%, but, we've seen a 7-week of consolidation and price grinding in Arcom, and I think it is the right time where one can actually play this upward move that we are expecting in Arcom. So one can buy Arcom even at a 9%, 10%, higher price, and we're expecting a target of close to 35 and keep a stop loss at 27. The second stock that we're bullish on is Bharat Financials. If you go down to the smaller time frame charts, I think Bharat Financials is on the verge of an inverse head and shoulder pattern breakout, and I think inverse head and shoulders, when they come, they are pretty accurate. I think one can consider buying Bharat Financials for a target of 1065 in the short run and keep a stop loss of 1013.
Okay, so those are the top 2 trading ideas from Hadrian. Rahul, what about you?
Yeah, I have 2 buy calls. First is a buy in Petronet LNG. Stock has been moving in a range, and today it has managed to break out that congestion range. So definitely the momentum is picking up in the stock. Though the stock is slow mover, I would take a little directional and short-term call. So swing traders can buy at current levels 253, and on corrections to maybe 249. Upside positional target is 265, and stop loss would be 245. And even I have a buy call in Bharat Financial. Definitely stock has seen some sort of traction from the lower levels. Last 2 days the stock is trading with a positive bias, strong momentum seen. So definitely stock can inch up to the levels of 1100. Traders can buy at current levels and on corrections to 1015. Upside target 1100. Stop loss should be 1001 on the downside.
Okay, so that's a consensus buy call which is coming on Bharat Financial from Rahul as well as Hadrian. I just want to pull up GSK Consumer. I guess there has been a surge in that counter just in the last few minutes. Yes, it's trading with gains of nearly 7%. And if I'm not mistaken, the numbers of this company, the financials of the third quarter had come in on Monday, but that's a sharp rise. It's a sharp rise. It's not every day a counter like GSK Consumer sees gains of 7%. Rahul, what's the view on charts here? I don't know if it's a very liquid counter.
Yeah, rightly said. This is not a stock for trading. It is an investment stock. And if you look at the last 8 to 10 trading sessions, the stock has been under pressure from the levels of almost 6,900. Yesterday it has made took a pause around 5,950, and again today we have seen an engulfing bullish pattern. So definitely after this today's move supported with strong volumes, I feel that again stock can retest the levels of 6,800 on the upside. So maybe today it is almost up by 700 points. So definitely any cool of maybe 2-3% correction should be used to buy with a stop loss below 50,900, and short to medium term, I feel the stock can again retest the levels of 6,800 to 6,900.
Okay, that's interesting. Well, let's get in a fundamental voice on the show as well. Mr. G. Chokalingam joins in with his thoughts on what's happening within the markets, what's happening to specific pockets as well. Mr. Chokalingam, thanks so much for joining in. It's a great day for PS, at least the NBFC space, because the common belief seems to be that the space that is vacated and likely to stay vacated by the PSU banks will be an open ground for NBFCs. The story that was playing out in whole of 2016 and 2017 could well get played out in 2018 as well because of a set of new rules by the Reserve Bank as well. What are your thoughts?
Certainly. I mean, you are right. PSU banks are getting hit on the balance sheet quite regularly in terms of new norms coming in from the central bank. On top of it, we have seen the news flow for Punjab National Bank. So definitely in the short term, they are creating more room for NBFCs to grow faster at the cost of PSU share. There is no doubt. But the only issue is the valuation. NBFCs are trading at even 5 to 8 times book value. Second, let us not forget what happened in the 4th week of October last year. In a single day, PSU Bank gave even 20 to 40% return. I am not saying that kind of return can come, but only my optimism is that all these provision norms are now getting bunched in a shortest span of time, and therefore in the near future there is less room for RBI to impose any more provisional norms, and these are all again inherited loan portfolio. The fresh massive infra loan is not available at all, and they are not becoming NPAs. So therefore, I feel that slowly the PSU banking stocks are bottoming out. Actually, by end of this current calendar year, I would not be surprised in the stock market if PSU banks come back with a vengeance and reward much more than the NBFCs. So therefore, I remain positive on medium to long term. That is, for a period of 8 to 10 months on PSU banks. But certainly, couple of months, this space could continue to be under pressure.
All of these, Mr. Chokalingam, today are available at the buyer's wish. What is it that, where will you put your money to work within the PSU banking space? And then I have a question on PNB, but that's separate. Firstly, the broader PSU banking space.
To be fair, I mean, I have not completed my analysis, but I can share with you what investors should look out in these PSU banks at this juncture. One, if any bank has eroded the net worth in terms of outstanding NPA, like IOB, don't touch the bank. If any PSU bank is into net outstanding NPA in double digit, more than 9-10%, that's again untouchable. And also, any PSU bank is degrowing the credit in a bigger way, as against a 9-10% growth in the industry, then again that is untouchable. So it means any PSU banks which have a net NPA around 4 to 6% and able to maintain the credit base intact, preferably able to grow in 4 single digit at least. And third, the net worth is much more than the outstanding net NPA. Then definitely one can buy those kind of PSU banks. And the universe could be something like Vijaya Bank, Bank of Baroda, and PNB. But one has to further drill down the valuation in terms of price to adjusted book value. I am sure these kind of comparable banks, some of them would definitely reward big alpha before end of December 2018.
Okay. Mr. Chokalingam, any thoughts on PNB?
I just looked at it. The notice uploaded by PNB is a little vague. It doesn't give you a lot of scare because it talks about transaction, but within brackets, they have put messages. So as an analyst, I try to read without contacting the bank in terms of logic. Two extreme. I mean, one extreme, it is not that the entire 11,000 crore they are going to lose. If I, interpret in my own way based on the fact that they have put it as a messages within the bracket for these fraudulent transactions. So if that is the case, I think it has fairly discounted today because in case it is not true, if it has to incur 11,000 crore, then the stock would not have corrected 8-9%. It should have corrected more than 20-30%, because the net worth as of March 31st is about 34,000 crore. Sorry, 35,000 crore, and outstanding net NPA as of December 31st is around 34,000 crore. So what is left out is only about 1,000 crore if you adjust for the outstanding net NPA. So therefore, if the damage is total, that is about 11,000 crore, then the stock is not worth even this 146 rupees. It should be, I won't be surprised if it goes to double digit. But I believe the damage is not likely to be to that order if I interpret, the transaction within bracket put as messages in my own way. So therefore, one can definitely hold the stock. And if the fear recedes on these fraudulent transactions, then one can even start buying the stock.
Okay, so that's about PNB and the entire PSU banking space. Now the PSU banking index is down over 4% in trade, which is at day's low. Mr. Chokalingam, let's talk about your top fundamental pick of the day. And I guess you have a buy on Nesco. What's the rationale behind it?
Yeah, we have invested in about roughly 20 mid-cap stocks for our clients. And I would consider Nesco as one of the top 4 to 5 high conviction ideas. This confidence comes from the fact that it has got excellent balance sheet, debt-free. It has got about 500 crore cash. Point two, it is into service businesses. Originally, it was a steel company. Now, slowly, they converted into a service company, offering exhibition centers, IT parks, and now they got into hospitality in terms of food court. Now, they are expanding the existing verticals also. And if you look at last 5 years, it has been a consistently growing company in terms of both revenue and bottom line. That because its revenue model is linked to the inflation. As inflation rises, our economy itself rises, the rental income from IT parks and exhibition centers keep growing. And third, they have got into food court within the Nesco complex, and that food court through subsidiary, and it has done phenomenally well. The profits and top lines have gone multi-fold in the December, and of course, small base. Lastly, the company is believed to have 65 to 70 acres of land in Goregaon, Mumbai, heart of the city. And I believe that there is a lot more surplus land which can be used for further expanding its services. Therefore, I believe that in the next 3 to 5 years, it can become a phenomenal multi-bagger, because net of cash, the enterprise value is only around 3,000 crore. But if one has to value this land and other assets, I think it is multiple of current enterprise value in my estimate. So therefore, I recommend Nesco with a lot of confidence. And as a disclosure, my company also invested in Nesco.
Okay. Mr. Chokalingam, stay on. Lots more to talk about. Let's get in one more management with their numbers. Healthy quarter for Minda Industries. Margins stayed flattish, but revenue saw a jump of about 26%. To talk about the quarter and the outlook ahead, the CFO, Sudhir Jain, joins us right now on the show. Mr. Jain, can you hear me? Okay, can you summarize the quarter? Because as I look at it, the consolidated revenues grew 26%, the margins stayed stable, and the bottom line growth was healthy as well. Was it business as usual, or would you have hoped for more?
Yeah, good afternoon. In case we see quarter on quarter, as you have rightly said, that revenue has grown 26%, and EBITDA in absolute terms has also grown 27%, and PAT has grown 37%. And in case we see year to date, which is 9 months, revenue has grown 25%, EBITDA in absolute terms has grown 35%, PAT has grown 60%. So in case we see quarter on quarter or 9 month on 9 month versus year on year, there is a consistent growth in volumes, and both in top line as well as bottom lines. And this growth is coming mainly because of the fact that in last 2 to 3 years we invested into additional capacities of the existing products, and also we added new products which are adding to the top line. Particularly in case I give you some examples of filters are there, oil filters as well as air filters, alloy wheels, aluminium die casting parts. Similarly, we acquired render lighting 2 years ago. So there is improvement in both top line as well as bottom line in case of render also. In any case, you would be aware that in the year under reference, auto sector has grown 13% year on year. And when I say 13%, this is weighted average of 3 segments which are part of auto sector, which is two-wheeler, three-wheeler. Second is four-wheeler, including commercial vehicles, and off-road. All the 3 segments have grown in the year under consideration. On the base of 13% growth in auto sector, our top line has grown 25 to 26%.
Right. Mr. Jain, so I would presume that the higher share of commercial vehicle segment aided growth. Do you believe that such a growth can only multiply going ahead in Q4 and maybe the whole of calendar year 18?
Yes, I think I'm quite sure that growth of 20 to 25% in the top line would be maintained in years to come. And this optimism is on the basis of 7% GDP growth and auto sector growing in double digit. And also in case we see our Minda Industries growth in last 5 years, 7 years, so top line is growing at a CAGR of 20% plus. So assuming that GDP is 7% and the sector is growing in double digit, I'm quite sure that top line will grow 20 to 25% annually.
Mr. Jain, your 9-month margins are double digit, 10.2 versus 9.7, which was in the corresponding period. Will this be a new normal going ahead? Can we expect double digit margins from the company in FY19?
Yes, we are quite sure that EBITDA level it would be double digit, and at PAT level it would be 5% plus. And these kind of margins we will hope to maintain consistently in times to come. And reason for that is also, again I will come back to the same thing, is that better capacity utilization, whatever capacities we created and invested in last 3 to 4 years, plus consistent drive to improve the productivity in each of our plant. So that also is contributing to the improvement in margin, and on the basis of that we hope to continue to maintain these higher margins in times to come.
Final question from my end, Mr. Jain. I think if I look at across the research available on the company, you must have spoken to analysts and told them about huge upsides that you as a group believe will come about in the lighting business. Can you share some numbers here? What's the scale currently of the lighting business, and what do you expect it to be like, say, over the course of the next 15 months?
You are right. As far as lighting business is concerned, 10 years ago we were at number 5, 6 in volume terms, or 4, 5. But consistently now we have improved in terms of the turnover. Initially we started with our small plant at Sonipat. Subsequently we added Manesar plant and started supplying to Maruti from Manesar, and later on to Pune plant. Now we are setting up a lighting plant in Chennai. In the meantime, we also acquired Render globally, including their 3 plants in India, 1 in Spain, Colombia, and R&D center. So with this kind of growth and investments in lighting, we have been achieving top line growth of 25% CAGR year on year, and we target to maintain further growth, say about 20% CAGR in times to come.
All right, Mr. Jain, we'll leave it at that note. The going's been good for you so far, and we wish you all the best for the coming quarters as well. Okay, that was the management of Minda Corp. The stock's done quite well in the last 1 year. It's more than doubled. It's given its shareholders returns of nearly 120%. That's Minda Industries for you. But the stock today is just about trading with gains of nearly 0.3%.
Sales Bhilai blast furnace has shut down to metal leakage. Let's bring in Nikki Mirchandani, who joins us with more details on this. Nikki.
Hi Neeraj, the stocks have been doing well for the past 3 to 4 days, but then today we've seen the downtick of around 1.5% for this counter based on the Motilal Oswal note that we have. The BF1 of Bhilai plant has been shut down due to a metal leakage. Another update, it says that the blast furnace 2 has also been down permanently, is being put off to accommodate new capacities. BF3 is now seemingly, it looks at a dangerous level. The analyst who visited this particular BF3 said that there has been a water leakage that they inspected in the month of December in this shell, and a blast 4 to 7, furnace 4 to 7 seems to be running at pretty much normal capacity, whereas the BF8, which has recently commissioned at 3 MTPA, we have confirmed the development with the official spokesperson of the company, who said that yes, the plant has been down. The blast furnace 1 has broke down yesterday and has been shut down due to metal leakage. It says that the technical flaw led to the shutdown, and it's expected to be back though in few days. It produces around 1,700 metric ton of hot metal per day, and it also confirmed to us that BF2 has actually phased out and is not shut down to bring in the new capacity of BF8, which has just been ramped up. It also, however, denied what the analyst observation was, where they said that BF3 is now working at a dangerously close level of a water leakage. It said that nothing on those lines seems to be a regular activity. Now, what analysts make out of this, they say that the BF1, which is now gone out of the operation or maybe is temporary shutdown, will lead to 0.7 MT of volume impact out of the total 15 to 17 MT that SAIL produces. This means a 4 to 5% of volume hit is what we're looking at. But then the SAIL management or the official spokesperson gave us a different story. It said that they don't expect any kind of loss of production with this development, and in fact it says that the BF8 blast furnace, which has just been ramped up, is already giving in capacity of 3,000 metric ton per day, which is higher as compared to the set target of around 2,000 metric per ton per day. This is expected to further ramped up, and they don't see any kind of loss of production on back of this development.
Thanks a lot for that, Nikki. So that's, of course, the word on SAIL. It's a small disruption, not a big loss, really. It's been a strong uptrend. Mr. Chockalingam has been SAIL. The numbers looked strong as well. This minor disruption notwithstanding, what's your call here?
You are right, but still, if you look at EPS basis, it's not very impressive as compared to Tata Steel or JSW Steel. So maybe SAIL kind of stock would be suitable for short-term investors or traders, but for medium to long term, I would prefer choosing either JSW Steel or Tata Steel.
All right, Mr. Chockalingam, we'll leave it at that note. Thanks a lot for joining us today and taking us through your views on the markets. Well, as we speak, Nifty is in the red, 10,533 for the index, down almost 7 points. And remember, both our technical experts, Hadrian as well as Rahul, highlighted at 2:30 that use any sort of pullback for Nifty to short at higher levels. Well, we'll get their view once again. But before that, let's go across to Yash Upadhyay to find out which are the Fab 4 stocks that he's tracking for the day. Yash, over to you.
Good afternoon, Navneet. So NCC, we kick things off with NCC Limited, and they had reported a good set of numbers. Their revenue saw a slight dip of about 2%, but their net profit almost doubled to 100 crore rupees despite of a one-time loss of about 30 crores in the same quarter. Their EBITDA came in at about 255 crore rupees, which is higher by 46.5%, while margins saw a healthy expansion of about 460 basis points. So all in all, good set of numbers for NCC. While rice stocks were also buzzing in trade today, with KRBL leading the pack, gaining almost 6.5% at this moment after ace investor Monish Pabrai acquired a little over 64.5 lakh shares, or about 2.7% equity in the company via bulk deal on Monday. Binani Industries is locked in a 5% upper circuit as well after there was a Bloomberg report suggesting that Ultratech Cement and a consortium of investors led by Dalmia Bharat have emerged as the top 2 bidders for Binani Cement, which is being sold as part of the corporate insolvency process. Housing finance companies were buzzing in trade today as well, with the likes of Diwan Housing Finance, Indiabulls Real Estate, all gaining in trade today, with Canfin Homes being no exception. The stock has been gaining for a 5th consecutive day and is up almost 6%, almost replicating its Monday's performance where it ended 6.5% higher. Back to you guys.
Well, thanks a lot for that. So some interesting stocks out there. NCC clearly stands out. Good results too. Now we'll talk about that in a bit. But before that, back to Hadrian as well as Rahul Randeria and talk about this pullback that we're seeing in the banks in particular. And how does an average trader approach that? Rahul, I'll come with you first this time. The Nifty Bank down 1%. The PSU Bank Index down over 4%. How should you trade this one? Not really a 2-month view. The next few days view.
Yeah, from October, if you look at the chart of October 2017 and 24th October 2017 and 25th October, there was a 40% uprise in the particular individual stocks, and again 10 to 15% on the next day. From the next day itself, the stock PSU Bank itself has started drifting lower, making lower tops, lower bottoms. So now looking at the overall charts in SBI, Bank of Baroda, Punjab National Bank, Canara Bank, Union Bank, any of the PSU banks, and Bank Nifty, the view is that it has shown a sell on rallies kind of the scenario, and any pullback in individual stocks has been sold off at the higher levels. But on the contrary, if you look at the 4-month of pattern, and currently where it is pan out, the most negative news are coming, and the stock is retracing the 100% of that particular rally of 2 days. So definitely at these level, it could be highly risky to go short in PSU bank stocks as well as on Nifty Bank Nifty for a larger degree downside trend. But yes, for a couple of days, any pullback should be used to go short. For example, to be more precise, if we talk about the specific stocks, PNB is being drifting towards the levels of the gap area, which is 138. So maybe anybody wants to trade for a 10 rupees downside can go short on any intraday pullback. Again, Bank of Baroda, same situation or same scenario has been panning out. Canara Bank, same scenario is panning out. So definitely 4 to 5% downside is seen, but not for a long term. Maybe for a couple of days, if anybody wants to trade any 2-3% pullback, maybe if it comes tomorrow or day after, should be go short. But not major downside is being used. But definitely for long term investor, this should be used as a buying opportunity.
Okay, Hadrian, how are you approaching trade here?
Yeah, see, it's clear actually, there is clear weakness in the PSU banks, which is actually leading to weakness in the Bank Nifty. So as far as the Bank Nifty is concerned, this lower top, lower bottom cycle, I don't think so is coming to an end, in the next 1 or 2 days. I think the weakness will persist. So I think if the Bank Nifty, shuts below the 25,450 levels, which currently it is trading below the same, I think one can carry forward their short positions, and one can play short for another 200-250 points from here on in the next 1 to 2 days.
Okay, and Hadrian, just wondering what are the levels that you would be watching out for a PNB individually? I mean, whether people trade or no is separate, but what's the extent of the downside?
Yeah, see, if I look at the larger time frame chart, that is a monthly chart. It's a complete howler. In fact, if I see, there are 3 tops: 2010 top, 2014, and now 2017. So these are 3 tops that have been created, and PNB is unable to break the 230, 231 mark very easily. From there on, we've seen after hitting every peak, we've seen a huge sell-off in PNB. I think we are set for another huge sell-off in PNB. I wouldn't be surprised if we close below 140 levels, on a weekly basis. Things can get even worse, and maybe a double digit also is likely on the cards. I'm just saying likely, but I'm just trying to explain what I can see on the charts. Even double digits won't surprise me for a PNB from here on.
Ominous signs thereof. Okay, before we get in, Siddharth Sidani, it's time now to get a sense of what's happening within the FNO space and what could enter or come out of the ban as well. Navneet, what's standing out on your list?
Well, Neeraj, 2 stocks I'll be tracking for tomorrow's session, and one of them is Wockhardt and the other is Jain Irrigation. Both of them are likely to enter into the FNO ban for tomorrow's session, but just a caveat here, the trends do change in the last 15 to 20 minutes of trade. For Wockhardt, yesterday overall open interest was 86%, and today there has been some activity for the futures of Wockhardt as well as a couple of the option strike. And for Jain Irrigation, let me tell you, this came out of the FNO ban for today's today's session. But after coming out, there's been huge interest. I guess it's traders' favorite stock. There's huge amount of build-up that one has seen for Jain Irrigation. I would like to pull up the February futures. That will give you a clear indication as to how much build-up has been seen so far for Jain Irrigation's February futures. And even the option strikes have been pretty active. So watch out for these two. 12% higher as we speak for February futures of Jain Irrigation.
Do watch out for these names. Do watch out for some of the stocks which are bucking the trend. Reliance is up about 2.5. NBFCs by and large seem to be doing okay with Indiabulls Housing Finance, Bajaj Finance right up there. And Adani Port has a 2.5% uptick. So good going there. We've already established the kind of gains that we're seeing in some of the mid-cap stocks as well. Nelco is now up about 20%. Cantabil about 20% as well. By the way, something's happened in Sonata Software. I don't know if it's got to do with results or otherwise, but just bring up the stock price of Sonata Software. I would guess it had to do with the results, maybe. Just trying to see that. No, not really. The results came out
last week.
If at all, they came out last week. The sharp surge that's happening in Sonata Software, 346. This is the 52-week high for sure. I don't know if this is a live high or no. Siddharth Sidani, Vice President of Equity Advisory at Anand Rathi, joins us on the show. Now and then we get a mid-cap IT stock surprising us, Siddharth. Any coverage on this one, Sonata Software?
Yes, we do cover Sonata Software. We have a hold rating on the stock. We've been covering since the prices were around 200. Overall perspective, the digital space is really doing good, but I think a lot of things has been priced in because numbers were pretty okay, and that was also last week. But I think right now the situation is not known why the stock is higher, but I think overall perspective, it has good fundamentals. Digital business really doing good. Overall, we may see some kind of a margin expansion going forward, but many things have been priced in the stock.
A clutch of other names too which are doing well. Siddharth, today HCL Info, for example, is up about 12%. L&T Infotech, of course, continues to rise and shine, another 4.5%. What do you like within this pocket?
So either of the two stocks we don't like, but I think what we like is Tata Elxsi. If you look at the automotive space, they've been really doing good in terms of designs and everything. Driverless cars, 5 of the top OEMs have already approved their product. Digital space is really doing good here also. The return ratios are strong. I think Tata Elxsi has a potential to go higher from here. We already had a coverage and we recommended Persistent as well as Cyient. They both have moved in tandem. Now we believe that Tata Elxsi will be a performer of 2018. If someone wants to buy this stock, can be bought with a target of around 1250.
That we can't just take our eyes off the PSU banking lot today. There's been a sharp correction which has come by. Will you use this opportunity to buy into any of these PSU banking stocks?
Well, we are more tilted towards private banking space, and looking at the situation of the numbers and the quarterly numbers of these companies, especially SBI and other companies, it has really been an howler. So we are not bottom fishing these companies, except a few likes of Indian Bank, which we like, and the numbers had been really good. These companies on the dips can be can be looked at, but overall perspective, it's pretty on a blanket side. You can avoid PSU space. I think private banking space is the space one can look at, and in particular, IndusInd Bank is the company which we are looking at.
Okay. IndusInd Bank, well, the corporate facing banks have faced the stick. Companies with a better CASA have probably done a lot better in the session today. Though the Nifty PSU bank, by the way, the index has slid further now, 1/3% down for the Nifty, knocking on the doors of 10,500, and the Nifty bank, the principal culprit, 1.5% down, or 1.3% down. Well, no surprise there that it is looking weak. But Yes Bank, almost 5%. State Bank of India is at 275, down another 4.5%. And Axis Bank is down about 3.7%. Anything which is a corporate-facing bank is facing pressure. ICICI Bank, 2.25% down as well. So a lot of pressure out there on some of these names. in this session. I don't know if dealing rooms have been talking about them or no. Let's ask Darshan and Yatin who join in with their channel checks. Gentlemen, both of you, good afternoon. Thanks for joining in. Darshan, to you first. What are you hearing from your sources? Anybody mention anything about PSU banks?
Yeah, so PSU banks and banks as a space is seeing a lot of shorting today, and the general trend is that the weakness will continue. Even when the Nifty was trading with a positive bias, there was significant amount of pressure on the banking space. The PSU banks are down almost. In fact, if you look at the top 10 F&O losers, all 10 are financial institutions or banks. So there is a lot of selling pressure, and they believe that this will continue. So dealers do believe that there will be more pain likely ahead for the banks going ahead. One of the other counters that's been spoken about is Sun Pharma. Some of the HNIs are actively shorting the counter ahead of the results that will come out today. Remember, the inspection, Halul inspection is going on, but for another 7-8 days there won't be any clarity in terms of what is happening. So Sun Pharma is the counter that dealers are talking about. And Max Ventures came out with an extremely strong set of numbers. Margins again back in double digits, strong traction. The counters up almost 10% on heavy volumes, almost 30 lakh shares being traded, and dealers believe that the traction probably will continue for Max Ventures as the new capacities have actually started paving way for the company. But Yatin, what are you hearing?
Well, Ashok Leyland, that is one stock which is on a roll, and despite the market conditions, it's bucking the trend. In fact, the stock is trading at record highs, and dealers indicate that FIs are set to be aggressive buyers in trade. On the contrary, NMDC, watch out for this counter. Dealers are expecting some bit of trading downside based on F&O trends, so they are recommending a STBT kind of a strategy as far as NMDC is concerned. And you were discussing about Sonata Software before the dealers segment started, but a lot of HNIs have been buying the shares from the open market, and dealers do expect further upside as far as this stock is concerned. The results came in the first week of Feb. But post that, we have seen good traction, and today finally on decent volumes, this stock is doing well, and dealers expect further 10 to 15% short-term upside on the stock.
Wow, 17% high. Thanks a lot for that, Yatin. Rahul, any thoughts? Sonata Software?
Yeah, as we see, the larger degree trend seems to be very positive. Primary trend intact, making higher tops, higher bottoms. Stock trading near the unchartable trajectory. Definitely on the upside, we could see stock testing the levels of 365 on immediate basis, maybe in a couple of days. So definitely any pullback maybe tomorrow should be used to buy for a target of 365. Stop loss should be placed around say 322 on the downside.
Okay. And by the way, corporate facing banks, we're talking about the weakness in Nifty Bank and the PSU banks. So the private banks are not spared either. 4.5 for Yes, 3.5 for Axis, and ICICI 2.5. You wouldn't say, Navneet, we were surprised, but just the extent of cuts and the ferocity of the fall in the last half an hour.
We've broken the 10,500 mark for the day.
That too. So it's looking more and more ominous. Let's get in closing strategies from our experts. Hadrian, to you first. Actually, before I get in your closing strategy, Hadrian, the 3 Nifty private sector banks which are facing pressure today, and if you would trade any of them, Yes, Axis or ICICI?
Yeah, I think I'll go with the Yes Bank. Weaknesses surely seen, and the negativeness is really spilling off on the private banks as well. But I think Yes Bank is actually approaching its long-term 200-day moving average that is close to 320, 318 levels. So I think if we manage to sustain above those levels, then I think one can consider buying Yes Bank. Whereas as far as the closing strategy is concerned, if we don't close above the 318 levels, then I think one should remain short. So it's open either ways, because it's actually trading at such a crucial point. It can either break further or it can bounce back from here. So sustaining above those levels is important for a Yes Bank.
Okay, and what would be your closing strategy?
Yeah, I'll go with the long position on another mid-cap IT, and that is Mastek. The stock is actually given a very beautiful breakout from this consolidation. We've seen this consolidation for the past 5 to 7 trading sessions now. And I think Mastek is one stock that one should not miss out on. The breakout is so beautiful, good volumes, delivery-based buying is also visible. I think one can play Mastic for a target of 540, 545. Another stock that I am really bullish on is Ashok Leyland. Pretty stable, stock. It has not paid any heed to the sell-off that we've seen in the overall markets. I think Ashok Leyland is one more stock one should have, in a short-term portfolio. Play for a target of another 7 to 8% upside from here on. Cannot be ruled out on an Ashok Leyland.
Well, the broader markets have also given up their gains, so both Nifty mid-cap as well as the small-cap index are trading in the red now. But Rahul, what about your closing strategy?
First of all, I will go for STBT in Nifty. Currently, it is just quoting below 10,500. I feel that tomorrow it can test the levels of 10,417 on the downside. That is Nifty spot. So anybody who wants to trade for tomorrow can short right now, and stop loss should be about 10,550. On the contrary, I have two buy calls. First is the buy in Wipro. Stock was knocked down from the levels of 335. 2 days back, stock has taken a sell-off has taken a pause around 284. Stock is well poised into deep oversold territory, so we could see a pullback from the current levels. So definitely traders can buy, swing traders can buy with a stop loss of 280. Short to medium term target would be 306 on the upside. My second buy call is in Mahindra & Mahindra Financial. Stock has given a flag pattern breakout. Intraday pullback should be used to buy at current levels. It is not an intraday or 2 days call. It is for short to medium, maybe for at least 8 to 10 days. So definitely at current levels one can buy. Stop loss should be 430 on the downside. Short to medium term, stock can test the levels of 480 on the upside.
Okay, so those are the closing strategies from our experts. But before we close the trading session today, let's get you one more fundamental pick going. Siddharth, you're bullish on DCM Shriram on back of their expansion plans. Could you take us through what the target price is for this call?
Well, we are positive on DC and Shriram with a target of 745. We believe the company is more focused towards the revenue. The major revenue which comes from is chemicals and agri space. I think both the things putting together would be 70 to 75%. Chemical, in terms of chemical, they are into chlorovinyl. In the agri space, they are into a little bit of a sugar and other seeds and other products. I think DCM Shriram has good expansion plans of around 1200 crores, which may be commissioning in next 2 years. Overall, you can expect 18-19% kind of revenue growth for next 2 years. On the whole, we can expect more than 15% margins for next 2 years. So overall perspective, DCM Shriram is a steady ship. Promises a good set of returns going forward. I think one can look at buying this company fundamentally strong with a target of 745.
Wow. Okay, DCM Shriram. This is okay. This is one company that's probably holding out a little bit in the session today. By the way, as we speak, the Nifty Bank has worsened 437. We are closing at the lowest point of the day. Bring up the rest of the world picture as well. Just want to see what's happening to the rest of the world. I'm sure our problems are our problems, and it's just the weakness in the banks, and maybe this scare of this PNB fraud having spread to some of the other banks as well, and the other banks could come into pressure too. The rest of the world is not a ugly place. We're seeing a tick of green across the European markets. I would presume the Dow futures trading with a fair bit of green as well. But right now, we have our own problems to contend, and the Nifty Bank has given up much more than what it gained in Monday's session. Look at that. The rest of the world is a good place, but banks facing the brunt of selling pressure in the session today. Not surprised really, but just that the extent of the fall is very, very strong. The oil market, oil and gas names, ONGC and HPCL, too under pressure. TCS is down about 2% and save for Reliance, which is up and about and helping hold the index a bit. It's an absence of heavyweights gaining meaningfully, which is probably also hurting the index. Lastly, just want to mark the Nifty PSU Bank Index. It should be down now about 5% if I'm not wrong. Though I do say that the last few minutes, it's essentially the private sector banking names which have also fallen. But the Nifty PSU Bank Index, this is 5% now. This must be one of the steepest falls that we've seen in the recent past. 3295 for this index. The Nifty 50 now need 10468.
No, this is definitely not a good closing for our markets. Also coming at a time, as Neeraj highlighted, when the globe is actually trading in the green. The European markets had a firm opening today and they've been trading in the green. Well, before we wrap, I just want to pull up Page Industries, and I know it's an illiquid counter, but we've seen some strength in this counter, not today, but in the last few sessions. It's definitely come off day's high, but still holding about the gains of 2.6. Rahul, how are the charts looking? I remember in the last 3 to 4 sessions, the stock's been going up.
Yeah, rightly said that the stock has rallied from the levels of 18,000 maybe 10 days back, and currently it is just nearing its major supply zone of 23,000. So at these levels I would not recommend to buy because the risk reward are not favorable. But yes, definitely those who have bought at the lower levels and those who are getting a decent profit because the indices are down and the stock is moving up, one should try to book profits at current levels, maybe in the range of 22,800 or 22,900. Because I feel that at higher levels stock could go into a consolidation, or we could see some sort of profit booking at the higher levels. I would not recommend to buy, but yes, one should book profits at the higher levels.
Okay, so one can look to book profits in Page Industries, a counter which has been going up in the last few sessions. Well, it's time for markets to close, just 2 or 3 minutes to go. Let's head across to Neeraj to find out how exactly the closing is panning out. And Neeraj, clearly the picture is not looking good. We're going to be closing around the day's low mark.
Yeah, so at the day's lows, and predominantly for the Nifty Bank, though, as we said, the Nifty PSU banks also to be blamed. Second fall of over 5% in the last 1 month. That doesn't inspire too much of confidence. The mid caps and the small caps, they were faring a lot better, and these two have reversed completely. The small cap index is down almost 1%, and the mid caps too, trading in the red. Yes, if you look at the Sensex contribution, you will see some stocks in the green, the likes of Reliance, etc. Bharti Airtel about 1.7% as well, and some gains for Adani Port, but that's okay. Look at this list here and look at the quantum of banks which are out here. Yes, SBI, Axis, ICICI Bank, all four are having a fair bit of red. IndusInd Bank, which is trading in the green at a point of time, is also down in the red. And there are stocks like Sun Pharma, TCS, etc., ITC about 1.5%. So all of these are putting the pressure, but predominantly concentrated around the banks and more so around the PSU banks, though you would have to say that on an index, it's also got to do with the corporate facing banks, the likes of Yes and Axis. Navneet, what about the broader end? That too has come off.
That's right, Neeraj. They too succumbed to pressure after the benchmarks fell off in the last hour of trade. Well, let me start off with few stocks which were locked in upper circuit today, and one of them is TTK Healthcare. The counter has seen a lot of buying interest in the recent past. As you can see, the intraday chart, it was up nearly 20%. Canterville Retail is the other one which was active, and I guess the move came just in the second half of the session, as the chart is indicating. So that also closing the day with gains of 20%. Nelco is the other one where a lot of these analysts are turning bullish, and today we had Mr. Chokalingam also giving his Panda pick of the day on this. This counter also closing the day with gains of nearly 20%. In the second half of the session, we saw Sonata Software surging. Now the numbers came last week, but at these levels there was some buying interest which was seen for Sonata Software. So finally a healthy closing for that counter. And talking about the mid-cap ID space, you had HCL Infosystem 2 which rose in today's session. The rise stocks were pretty active. On Monday you saw Monish Pabrai's fund checking into KRBL, so that stock was up, and Kohinoor Foods ahead of its earnings was trading very firmly in today's session. Let me talk about the losers then, and the list is actually dominated by the PSU banking space. So call it Punjab National Bank, which was the biggest loser in the Nifty PSU banking space. Bank of India was also under pressure, and besides the banking counters, you had NMDC which reacted negatively to its earnings. The tire stocks which were up on Monday's session, specifically JK Tire, saw some huge amount of selling pressure which came today after surging on Monday. So JK also closing the day around the day's low mark, Neeraj.
Well, so all in all, a lot of pressure at the fag end of trade. Bring up the Nifty, bring up the contributors list, and you will see a tick of banks and financial names right out there contributing on the negative side. ICICI, SBI, Axis, and by virtue of the heavyweight that it is, ITC out there, trying to be, Reliance tried to balance things out a little bit, but yeah, there's just too much of pressure that a clutch of heavyweights have put in, and I dare say I think the turnover would have picked up during the close of trade on the FNO side as well. Yeah, almost what we've been used to seeing. So 34,000 crores for NSE cash, FNO2 about 7 lakh crores, and it'll be interesting because tomorrow we'll have the weekly expiry, and you would expect some fun and games happening on the Nifty bank and on the option side as well. So this number will be substantially higher in tomorrow's session. I just don't know how this sets us up for tomorrow, because we've had some bit of pain being taken out, but the global markets seem to be supportive. It'll be very, very interesting to see what happens in trade tomorrow.
Yeah, Neeraj, considering it's the weekly options expiry day for Bank Nifty and we fell almost 5% for the PSU Bank, there could be a bout of short covering that one can see, considering it is the expiry day, because we tend to see that volatility to come by. Once the rates are settled, finally we'll see the trend emerging once again on Friday.
Yeah. Hadrian, let's talk about how would you approach trade tomorrow. The global markets are supportive. There's some bit of pain and poison that's been taken out in today's session, more so in the second half. Are we near some intermediate supports from where we can bounce back?
Yeah, global support is the only fear that can actually bring to the short positions that are actually open up today. So I think Bank Nifty, we were talking about 25,200 in the next 1 or 2 days. When we spoke earlier, I think it is already close to those levels. So I think this opens up for levels of another 200 to 50 points from here on for a Bank Nifty. So what happens, Neeraj, in such times of panic, sometimes these indexes try and create a double bottom kind of a scenario. And if you see 6 Feb low is 10,023, and on a Bank Nifty it's 25,023, and if tomorrow's day is the expiry, if we see this Bank Nifty falling by another 250 points, I think there is a very strong case of a double bottom formation that from where on we can actually see a meaningful bounce back. But we'll have to wait and see whether it is double bottom or we breach those 6 Feb lows. As of now, for tomorrow, we'll continue to remain short on a Bank Nifty.
Continue to remain short on Bank Nifty. And Rahul, the final closing rate on Nifty is actually 10,500.9. Considering the scenario, the global markets, we get positive cues from there. Will you use the pullback once again to short the Nifty?
Yeah, even looking at the global setup, even though Dow futures are high, trading at higher levels, I feel that we could see some sort of pressure on Dow today night. So definitely I'm not seeing tomorrow being a good day for our markets, and tomorrow being a Bank Nifty expiry for options. So we could see high swings coming on the Bank Nifty itself. But frankly speaking, today I was not expecting Bank Nifty to crack this much big. But if it drifts down to the level of maybe 25,200 and 25,000, then there is a concern for Bank Nifty also. If it closes below 25,200, then it could drift down to 25,000 and then 24,600. This is slightly a positional view, but definitely tomorrow we could see some sort of pressure even at the higher levels. So one should trade by starting at the higher levels for at least intraday basis, and then we'll see tomorrow where the Nifty and Bank Nifty are closing. If it closes near the day's low, then the panic could be seen further.
Right. Well, clearly the Bank Nifty future suggested there were some fresh short positions being taken. And finally, Siddharth, I'll come to you. Your closing thoughts for the day.
I think every fall need to be taken as an opportunity to accumulate good quality companies. At the same time, one has to be very watchful at the current situation, because more or less volatility is still going on in the market, although the levels are trading in a very narrow range. But I think volatility is still on and maybe still on going forward on the back of global noises, bond yield and so on and so forth. So I think one has to be watchful. In the same time, some quality stock accumulations at every fall.
All right, gentlemen, appreciate all three of you joining us today. Siddharth, Hadrian, as well as Rahul, thanks a lot for joining us and taking us through your views on the markets. Well, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching, but don't go anywhere. Up next is the Mutual Fund Show with Neeraj Shah.